Most Xero versus QuickBooks videos are made by someone who already switched, already has an affiliate link, and already knows which one they're going to tell you to buy. So, let me do the opposite. I'm going to start by telling you exactly when QuickBooks is the better buy. Because for a lot of you watching, it is. Then I'll show you the 4 traps in Xero's pricing that nobody mentions. The one QuickBooks limit that costs US businesses the most money in 2026. And a simple decision tree that tells you which one to pick. No, it depends. By the end of this video, you'll have an answer. Pick QuickBooks Online if you're US-based and want payroll, tax filing, and bookkeeping in one bill. It's also the better choice if you carry inventory. Your accountant is a QuickBooks Pro advisor, and you don't want to pay them to relearn everything. Or you need job costing and class tracking at scale. Pick Xero. If more than one person touches your books, you're outside the US, especially in the UK, Australia, or New Zealand. You want cleaner bank reconciliation, or you're tired of annual price increase letters. If you're a solo freelancer under $100,000 with a handful of invoices a month, honestly, neither. Both are overkill, and I'll tell you what to use instead at the end. Here's where every comparison video lies to you by omission. They compare the headline price. Nobody compares the price you actually pay in month 7. Xero US has early, growing, and established plans, with unlimited users on every plan. QuickBooks Online has Simple Start, Essentials, Plus, and Advanced, with user caps built into the plans. And here's the 2026 context. Intuit raised US QuickBooks Online prices in May 2026, then again, effective August 1. Advanced took the hardest hit. That's 2 increases in 1 year on the same product. Now, for the part that actually matters. Trap 1. Both companies advertise huge introductory discounts. Xero has been running discounts of around 80 to 85% for the first few months, while Intuit runs 50% off for 3 months. Those are customer acquisition prices. Budget for the regular rate, because that's what you'll eventually pay. Trap 2. The discount and the price increase can stack against you. When your promotion ends, you don't necessarily roll onto the price you originally signed up at. You roll onto the current price, which may have gone up since you joined. Now let's talk about the limits nobody puts in the comparison table. Xero's Early plan has hard caps. It's not a light version of everything. It's a metered plan with monthly limits on invoices you can send and bills you can enter. Blow past those limits and you're pushed toward growing, which costs significantly more. So, Xero's entry price is only a real bargain if you're genuinely tiny. QuickBooks Simple Start is a single user. Not one admin plus some viewers, one user. The moment you need to give your bookkeeper a login, you're moving up to Essentials. QuickBooks also gates class and location tracking behind Plus. If you want to track profitability by division, location, or service line, that's where Plus comes in. Xero includes tracking categories on every plan, including its cheapest plan, although you're limited to 2 categories. And in 2026, QuickBooks tags are much more limited than they used to be, which has pushed some users up a tier for functionality they previously had lower down. So don't compare Xero's cheapest plan against QuickBooks' cheapest plan and call it an apples-to-apples comparison. Compare the cheapest usable plan for your actual business. Now here's the big US deal breaker: payroll and sales tax. QuickBooks has payroll built in. Same login, same bill, with tax filings handled and the information flowing straight into your books. Xero in the US doesn't have its own payroll. It integrates with services such as Gusto, which means a separate subscription and separate per employee fees. The integration is good, but it's still another vendor, another bill, and another support queue. So, run the real math. Xero plus Gusto versus QuickBooks with payroll. For a US business with even 3 or 4 employees, that price gap closes quickly, and sometimes QuickBooks becomes the cheaper option. The same applies to sales tax automation and 1,099 seconds, where Intuit's US-focused setup has a genuine advantage. This is the part where I'm supposed to tell you Xero wins. It doesn't. If you have US employees, QuickBooks is usually the cheaper and simpler stack. Everyone says Xero's reconciliation is better, but rarely explains why. Here's why. Xero's reconciliation screen puts the bank transaction and the suggested match side by side. One row, one confirmation. QuickBooks routes you through a banking feed and then a separate reconciliation module. Same basic job, more clicks. On reliability, both companies have invested heavily in direct bank connections. That's important because direct connections can be more reliable than aggregator connections. Anecdotally, QuickBooks users report more feed disconnects and duplicate transactions, but treat that as anecdotal, not hard data. Before you commit, check whether your bank has a direct connection with each platform. Now let's talk about reporting and where AI actually helps. Both platforms can produce a profit and loss statement and a balance sheet. Nobody switches accounting software because of a profit and loss. Here's the real difference. Xero's report layouts are highly customizable. You can group and sum accounts in different ways and save those layouts as templates. There's no true sub-account structure in Xero, and if you're coming from QuickBooks, that's an adjustment that can take some getting used to. Xero has also pushed hard into analytics, including forward-looking cash flow projections. QuickBooks is stronger out of the box for inventory, job costing, and project profitability. Advanced also adds custom reporting and workflow automation. If you need budget versus actual reporting by class and month without touching a spreadsheet, QuickBooks Plus can get you there faster. Both platforms are shipping AI assistants in 2026. But right now, both are better at categorizing transactions than answering complex questions about your business. Don't buy either one for the AI. Buy it for the workflow and treat the AI as a bonus. Now let's talk about support, the ecosystem, and your accountant. QuickBooks offers phone and chat support. It's widely available, but it's also widely criticized for long waits and inconsistent support quality. Xero is more ticket-based. It can be slower to get started, but the support experience can be better once you're connected with the right person. There's also a genuine flaw. You can't ask Xero a pre-sales question without an account, because you need an account to file a support ticket. But here's the factor that decides more software purchases than almost any feature: your accountant. In the US, QuickBooks familiarity is close to universal. Xero's accountant network is strong, but thinner. If your CPA has to learn a new system on your dime, you may erase years of potential savings. Ask your accountant before you switch. Seriously. Pause this video and text them. Now, can you switch accounting software in the middle of the year? Yes. The old rule about waiting until January is dead. What you actually need to do is pick a clean cutover date, usually the start of a quarter. Export your chart of accounts, customers, vendors, open invoices, and bills. Then decide whether you want to bring over historical transactions or simply bring over opening balances. For many businesses, opening balances plus read-only access to your old file is enough. You'll need to rebuild your bank feeds and rules from scratch because those rules don't migrate. Then reconcile your first month twice. For simple books, this can take half a day. If your books are messy, expect a weekend. If you have inventory or payroll history, hire someone who knows what they're doing. Migration isn't a nightmare, but it's also not one button. Anyone telling you it is probably hasn't done it. So here's the final verdict. Pick QuickBooks Online if you're a US business with employees, payroll needs, inventory, job costing, or an accountant who already works in QuickBooks. Pick Xero if you have multiple people working in the books, you're outside the US, especially in the UK, Australia, or New Zealand, or you simply prefer its reconciliation and user model. And there's a third option I promised. If you're a solo operator with no employees and only a couple hundred invoices a year, you probably don't need either of these. A lightweight accounting tool, or even a well-built spreadsheet with a bookkeeper doing a quarterly cleanup can cost you a fraction of the price. Upgrade when you hire employees, take on inventory, or need a lender or investor to properly review your books. I'd rather you buy nothing than buy the wrong thing through my link. Comment with your business type and number of employees, and I'll tell you which one I'd pick. And if this pushed you toward one of them, check the links below for the current promotions on each platform. I keep those updated because these offers change regularly.